Welcome back to another interesting panel and at day two of our summit. In this session, we're going to be looking at whether cross-border investing between Southeast Asia and India is on the rise. I'm Joji Philip, the editor-in-chief at DealStreetAsia, and I'm joined by three best-placed panelists to look at this issue. They are David Gowdey, managing partner, Jungle Ventures, Keelok, the CEO of Vertex Holding, and Akshay Bhushan, partner at Lightspeed, India and Southeast Asia. I'm sure the panelists don't need any introductions. Thank you to all three of you for joining me today. Pleasure to have you with us for this session. And I want to start with a very broad question. And all three of you, I would like a quick takes from all three of you, because all three of the funds, be it Jungle or Vertex or Lightspeed, all of you do both India and Southeast Asia. So between these two markets, there's both a lot of similarities and yet differences. So just want to start off, just want all of you to sort of quickly say or give our viewers insights on what are the similarities, what do you think are the big differences? Anyone can go first. Who wants to? Keelok, you want to start?
Sure, I guess talk about similarity. I guess both markets are emerging, and India and Southeast Asia market are emerging in terms of the technology investments. So in that sense, be it some consumer, be it fintech, you can see a lot of these applications. There are some more emerging applications. I guess difference in the sense this market is because clearly India is a single market, is much bigger. Southeast Asia consists of many small markets add together, so it's a lot more cross-border. So there will be the major difference between the two markets.
Akshay, you want to go next?
Yeah, sure. I think to Keelok's point, both markets are fairly similar in the sense that they're both emerging markets, and so we often what we find is that a lot of the infrastructural bottlenecks which entrepreneurs need to navigate are actually very similar. And a lot of that actually stems from similarities in market structure, right? If you pick most industries in Southeast Asia, especially markets like Indonesia, and you look at India, industries like retail or logistics, you just find a very high degree of fragmentation and inefficiency, right? And so that's actually, it's also one of the reasons why the opportunity is also the opportunities for entrepreneurs are very similar in both markets. Similarly, I'd say even if you look at consumer businesses or consumers, you're sort of seeing similar types of consumer behavior, as a lot of these consumers in both markets are coming online around the same time. And so they're tryst with technology and the behavior and the way you sort of help them navigate into the digital ecosystem. A lot of that is similar as well. I guess where it sees some differences, is obviously it's India is one market, one regulation. There are obviously regional differences, but for the most part, it's relatively straightforward to expand across the country. And I think Southeast Asian entrepreneurs obviously have a much more mammoth task when they think about going regional, right, or beyond a country, and have a whole lot more to deal with. So I'd say, yeah, those are sort of the main differences and similarities in my mind.
Yeah. David, let me come to you. Some years ago, I'm not sure when it was, I think 2017 or 18, Jungle had produced a report which said that when you look at many matrices, be it internet penetration or broadband speeds or affordability and a whole lot of other parameters, many of Southeast Asian cities, markets are actually on a higher scale than India.
Yeah, no, that's right. That was a study that we did quite a few years ago. That's right. And at that point, I think the two takeaways were that Southeast Asia was more advanced in terms of access to broadband speeds and a lot of that. I think the place where we also noted that there was a big difference was the amount of venture capital that was flowing in to fund startups. Where India, has had a very well-developed venture ecosystem for a number of years, where Southeast Asia was still an emerging ecosystem at that time. Even today, if I think about the size, the number of funds in India versus this part of the world, and I agree with the other panelists. From a consumer perspective, there is much more homogeneity between consumers across these markets. And then again, I think from an operational execution perspective, there is a tremendous amount of complexity. And so most of the founders in Southeast Asia are facing greater challenges because most of them are building regional businesses. And so they're having to manage these operational complexities across multiple countries versus their Indian counterparts, which are operating in a market that they don't necessarily need to expand out of. They can build a substantial business just focused on the domestic Indian market. And yet the Southeast Asian founders, just don't have as much access to capital to fund some of those businesses.
Got it. David, just a quick question to you, another broad question before you go. When it comes to, for example, cross-border, which is your jungle for many years, have been doing both India and Southeast Asia together. Do you actually agree that there is a trend today? A lot of VCs do both these regions together. Not just the three of you, but there are at least 12 to 15 VCs that today do both of these regions. Is that a growing trend? Do you think so?
I think it probably is. And I think a couple of things are driving that. So one is that, like I said, the problem set that a lot of founders are solving are very similar in Southeast Asia versus India. From a consumer perspective, like I said, much more homogeneous markets in terms of what consumers are doing. And then I also think from a scale and size perspective, it's just a much larger addressable market to go after. I also think that, the larger the business can become, the different outcomes become available. So you have, different buyers that may be interested in your business if you're regional versus being a single market only. You could potentially get enough scale where an IPO, in another jurisdiction may become more achievable because you have that level of scale. And so I think there's a range of things that are feeding into that. But I think the main premise is that the problem set between the markets are actually quite similar, depending on what business you're talking about.
I think, Joji, I think you touched on a very interesting point about Southeast Asia and India investing together. This trend is increasingly much more common today. But when Vertex first went out to raise money in 2015, it's very interesting that we see the very single market focus India fund or Southeast Asia fund. Very few people would do a cross-border Southeast Asia India together. In fact, when we did that, Vertex Ventures put Southeast Asia India fund together as a group versus most other people. I still remember this conversation I had with this Hong Kong-based fund of fund, and literally the gentleman was very politely scolded me, not understanding India is South Asia, not Southeast Asia, which I told him I understand the concept of Southeast Asia and South Asia. But he scolded me for almost non-stop for 10 minutes and told me the difference between the two countries, the culture and everything else. And I told him it's not a matter of culture. What we're looking at is what David said and what Akshay said. It's about venture capital ecosystem development. They are both emerging markets. It makes more sense to invest it to them together as one group. And so when we first raised the fund, it was very difficult in 2015. A lot of people think that we are just either did poorly in school in geography or don't understand Southeast Asia and South Asia are two different places. And so it took a long time for us to convince people. So when we raised our first fund, Fund 3, it took us a long time to convince people. But it was very, we are very pleased that the past 2 years, a lot of people now put these two regions together. So now this becomes a norm. If you do not invest Southeast Asia and India together as one group, you will be considered not fashionable. In the past, and 4 years ago, if you say you invest India and Southeast Asia together, people think that you are stupid or dumb. And today, this is very fashionable as a one group. Yeah.
But can all VCs do it? Because you need to be at a certain scale, you need to be at a certain fund size. In terms of team expertise, you need to have certain capabilities as a VC to do both regions. So maybe, am I right in saying the more established, the bigger VCs, the three of you, maybe the B Capitals, the Sequoias, 8 Roads, several of the big names can do it easily, but maybe not all can do both regions together, right?
No, I think so. It's correct. You need to be certain size. And I think the point is what David said. Ultimately, you're picking the best investment thesis to address this emerging market. So you should not be, trying to pick the best in, Malaysia, for the sake of example, hoping that you pick the best player in Malaysia, knowingly that they're probably a better player in Indonesia, a better player in India that could be addressing the same similar thesis, right? So I think so. Well, I think that's the point that what David was saying, which I agree, is that ultimately these markets are very similar in development stage and in terms of ecosystem, in terms of the challenges. You should look at it as a whole and try to pick the best winner and best example in this region. So of course you need to be of a certain market size or fund size to be able to do this. And that's why I think the people are, three of us probably can do this easily. But some of the funds who are, let's say, suboptimal, let's say 20, 30 million, maybe harder for them to do that. But so therefore, you need a decent fund size to be able to address it together as one group.
Got it. Akshay, I just want to move to you to ask you, like you moved from Lightspeed, you moved to Lightspeed Singapore office recently. You moved here from India. Are there learnings that you think you can bring, like learning from India, that you can use here when you look at startups across Southeast Asia? Is it like maybe seeing similar companies in India, how they execute, how the playbook has happened there? Do you think so? There are learnings that you can use?
No, absolutely. I actually think, given we talked about how, both markets are in many ways at similar stages of evolution. But I'd say, like, in terms of the venture or the venture ecosystem in India or the startup ecosystem is maybe about a cycle to a cycle and a half ahead, right, of where Southeast Asia is at. And then if you go back to, some of the earlier models, maybe 2 or 3 cycles ahead, right? So the interesting learnings, I think, which we get is having seen entrepreneurs execute or build up their businesses up to scale in India, and really apply those learnings as we invest in Southeast Asia and help guide entrepreneurs around how to navigate a lot of the roadblocks they might hit. And actually, the roadblocks are going to be, in many cases, very similar because the markets are structured very, very similarly. And maybe to give you in some cases, it actually also impacts the way we make investing decisions as well. I can give a example. We invested in one of the largest B2B marketplaces in India, a company called Udaan, which started with electronics, right, as a category. Similarly, if you look at e-commerce started as electronics as a category in India. But one of our learnings from having seen these companies execute in India was that electronics is actually it's a low frequency use case, and most of the consumers are first time consumers. So what is a way, the learning from these entrepreneurs is that the entry point should actually be a high frequency entry point. And so we actually applied that learning when we invested in Indonesia, where we made our first 2 investments in B2B, B2C. One was in grocery and fresh, super high frequency, and the other was a B2B company focusing on FMCG, again, much higher frequency. So similarly, there are a number of these learnings which we apply, and help entrepreneurs navigate, and then also it impacts our investment lens as well.
Got it. I just want to slightly change focus a bit. Kilok, like coming back to you, I just want to ask you, in India, one of the things that we are seeing now, especially for entrepreneurs and companies, access to a lot of deals and investments in India were driven by the capital was coming from China. In the current geopolitical environment, capital from China is going to be very, very tough, not just immediately, but maybe in the next 1 or 2 years. Does that open avenues for more VC firms in Southeast Asia to look at India deals, or what do you think?
Well, I guess that is frankly is a very unfortunate event that this becomes a political issue. I think China funds or China investors has been quite a reliable, steady, later stage investor for India startup, which I think was good for India startups for a period of time. The fact that this is not there anymore, startups have to look for alternative. They have to look for other sources, could include some of us here and many other alternatives. But clearly the pool is now much reduced. So I think this is very unfortunate. I think that clearly will affect some of the startup in India. But it's just one of those unfortunate events happening in India. Yeah.
But will that give an opportunity for VC firms here, Kilok, to look at markets like India, or you think it's
Oh yeah, it's always an opportunity for us. And all of us at Jungle or even Lightspeed or Vertex, we all look at India actively. The difference now is that now we have less competitor, right? So we don't have the big Chinese pockets money, which are able to pay 5 times the valuation that we are willing to pay. So that give us better opportunity, better, more reasonable prices. But that's for us is good, right? But for startup, actually, it's unfortunate. They would love to get a 5 times better price than from any one of us here. But nevertheless, that sort of is good for us, but may not necessarily good for the startups, right?
Understood. I just want to shift gears a bit, move and look at the other big issue that confronts us today, which is COVID related. David, let me come to you. The last 2 days across many sessions, everybody talked about acceleration of certain sectors in the sense that medtech, health tech, and edtech, maybe SaaS, fintech, and all of that. And also, everybody was talking about acceleration in terms of digitalization. Every industry now, even those who have slow to digitalization, realize that that is the way forward, including many SMEs, MSMEs, and all of that. So in that, I just wanted to ask you, does this, when we talk about acceleration, does this also open up avenues for many companies to expand faster, say within Southeast Asia or from Southeast Asia to other geographies, or even from India to other geographies because of COVID?
I think the short answer is for sure. I think it's hard to talk in generalities. There are lots of sectors, as you said, that have seen some tailwinds because of COVID, whether it's telemedicine or remote learning or e-commerce. I think the thing that we've seen is that those companies that are growing this year have probably been investing more in developing feature functionality within their existing business rather than using capital to expand geographically. I still think as you expand geographically, and again, it depends on the business that you're in and what's required, what type of investment you need to make in order to enter a new market. But I think there's still a level of uncertainty that's around. And even if you're seeing growth, I think most of the investment is going to enhance the products that you already have, or to acquire a new base of consumers, or to appeal to a larger audience and build addressable market that way, versus expanding into new markets. Not saying that hasn't happened. We've invested in Sociola. They've done a great job in expanding into Vietnam in the midst of COVID and have performed fantastically there. So it is happening, but I think on a generality, I think it's probably happening less. I think the scale that will go behind some of these businesses because of COVID will make geographic expansion easier in the future, though. So I think you'll probably see a lot more rapid expansion next year and into 22.
Got it. David, just one more thing. What about, because Jungle does, you do both early stage all the way and mid and even growth stage. What about the early stage companies, in the sense that at the seed level, do you see a lot more companies being formed today which are global from day one? I'm saying theoretically you could have teams across Vietnam, India, Philippines, or India, Indonesia, or Singapore, India. So do you see a lot more such companies being set up today? Because earlier in the day, we were talking to another large VC here, and they said that in their latest batch of companies, 3-4 of them are global from day one. They have like multiple country offices even before at the launch level, at the seed stage.
Yeah. And, we don't invest in seed, but, and if you think about Australia as a market, Australia's probably had a lot more global from day one companies. If you think of Atlassian or Canva, you think about businesses where there's not a lot of infrastructure that's required to invest around the world in order to acquire customers and build out your business. Or if you think about Zoom, or businesses that are consumer-based that are either self-serve or have low requirements in order to onboard or start using. Software is a category that can be global from day one. And so I think you've seen a lot of businesses come up that way out of Australia. I think there will be more and more coming up from this part of the world. If you think back to Southeast Asia, 5-7 years ago, a lot of founders were very focused on building domestic businesses in Southeast Asia. And I think the thing that's changed is that we see a lot more founders interested in building regional businesses. You see more businesses starting to expand to the US market or expand outside of Southeast Asia. And so I think it's really that desire, that appetite on how big of a business can we really build. And to be global from day one, you've got to pick the right category. You've got to have the right business model. But it's certainly, there's no reason why you couldn't do that at a few.
Got it. Like, for example, TradeGecko, which was in your portfolio, I think their largest market was maybe the US, where you got an exit to.
Exactly. Which Intuit,
yeah,
you know,
so,
first global software company to acquire, you know, a startup in Southeast Asia.
Yeah. Akshay, on the same note, just coming to you, we spent quite a bit of time talking about similarities between the both markets and all of that, but we've not really seen examples of some of the big internet companies or startup companies from Southeast Asia going and launching operations in India. We've not really seen many of the established Indian startups, be it payment or fintech or e-commerce or B2B. We haven't seen many of them from India coming in and launching or setting up offices or launching operations in, say, Vietnam or Indonesia or Philippines. So why has that not really happened at a much faster scale so far?
Yeah, I think a lot of that is it's actually a little bit dependent on basically the maturity of the startup ecosystems in the respective countries, right? So I would say, like, are we seeing Indian companies expand into Southeast Asia? Yes, right. We're starting to see that a little bit, and we saw, and you know, to give a couple examples, like Oyo Rooms was an example of one of our portfolios from India, which expanded out. Similarly, enterprise or B2B software companies, I'm seeing that trend happen a lot more, right? For Indian companies get to a certain scale in India, and then start looking at some of the Southeast Asian markets. You know, why are we not seeing that the other way around, right? Like an Indonesian company expanding out into India. I'd say that is, that's a function of a maturity of the ecosystem. In many cases, for a lot of models, you know, India often has local incumbents, right? Just given the how much founder talent and how much engineering talent there is, you typically tend to find, a number of companies in every vertical, right? There's just a lot of depth there, right? Especially in the last few years, versus in, and so as a result, if an Indonesian company thinks about expanding into India, you know, they'll have to go up against a lot of like well-funded, large-scale companies, right? And so I can see this changing though over time as the Indonesian or some of the Southeast Asian ecosystems start catching up, and as you see new models coming out there, and where a company may not see as much competition in India, I can definitely see a lot of this cross-pollination happening more and more over time. But it's just a function of stage of maturity of the ecosystems rather than anything else.
David, how has it been for your portfolio? Because you're one of the oldest VCs in Southeast Asia. You've been doing India also for a number of years. Have you been, like, when you talk to the founders in your portfolio, have you sort of encouraged them to, for example, if it's a Southeast Asian company in Singapore, have you sort of encouraged them to look at India, or maybe a company in India in certain sectors where expansion should be easy? Have you sort of asked them to look at markets like, say, Indonesia?
Yeah, so historically, about 30% of our capital has been invested in the Indian market. And you know, most of our Indian investments have some geographic expansion into Southeast Asia as part of the thesis when we invest. I think the thing that we've seen is that most of the Indian companies, it takes a period of time for them to solidify their position there. I think India, to Akshay's point, it tends to be a much more competitive, higher competitive intensity market. There's more capital that's available, but there's a lot more competition that the companies face. But it has typically taken them a period of years to solidify their position before they're ready to expand into this part of the world. I think that time lag has shortened over time. So we just invested, for example, in a company called Better Place, and as part of their investment, they're now already expanding into Southeast Asia. And so I think you can accelerate some of those expansions depending on where the scale of the business is at the time of investment. But I think those timelines are certainly shortening. So I think you'll see a lot more companies start to come this way.
Got it. Just shifting gears again, Kilok, one of the things that you have always mentioned over the last couple of years, whenever I've spoken to you, maybe the last 2 years especially, is that the differences, one big difference between Southeast Asia and India, you have pointed out often, is valuations. You always felt that maybe valuations in India were stretched. And therefore, Vertex, you said, has sort of been careful to do deals in India. You said they won't, you have said that you won't rush into deals in India and you will be like taking your time. So is that like where is the valuation mismatch between Southeast Asia and India still high according to you?
No, I think this is actually a factor largely because a lot of investors miss out China. A lot of investors miss out China. Some of these global investors, they have missed out a lot of returns in China. And investors are always about looking for the best return for their fund. So as a result of this, the next best thing will be between Southeast Asia and India will be India because of one uniform market, similar in terms of population, maybe perhaps could be the next China of the global world. So a lot of investors, will tends to have the fear of missing out FOMO. I guess they will all rush into India, and then whatever they saw in China, they apply the same principle in India and make certain assumption and then make some simplified assumption. So therefore, you will see a lot of this kind of phenomenon that rush in, rush out. So valuation in India sometimes you see accelerate much faster than Southeast Asia. Southeast Asia, because of as what I think David mentioned this before, that because of these challenges, because it's more diverse, the entrepreneurs need to understand the culture, the systems better. So they tends to take some bit more time to build company. So some of these investors find this a bit more challenging. So they will not tend to overpay in Southeast Asia. So as a result of this, you always see this kind of discrepancy in valuation. India, you suddenly see a spike, and then suddenly you see a drop. So I think this is something that will continue for a while because you always will have these people who think that they don't want to miss out in this big opportunity in India. They always rush in, and then when they rush in, you have to stay out. So I think this will continue forever. Yeah.
And will you continue to be cautious on India?
Today, thanks to the new regulation, I guess that you will see less people rushing in. So therefore, I think the valuation is probably more sensible now. I think the next 12 months probably are more sensible. But you never know. Tomorrow there could be a regulation change. Then everything will change again. So today, I think are much more subdued because some of this is traditionally much more FOMO investors have been all flush out. So the entrepreneurs are more pragmatic, more realistic. So I think valuations are much more practical now. So I think today I think it's probably okay. Yeah.
Got it. I just want to touch on a new point. When we talk about cross-border investments, it need not necessarily always have to be direct deals. And I'll start with David. David, in the case of you and Jungle, if I'm not mistaken, has also done quite a few deals where instead of doing a direct deal, that you've sort of bought secondaries, shares from other early investors, angels, pre-seed investors, or seed funds, or some of these VCs. So how big is this an opportunity for VCs, like some of the larger VCs, to buy out earlier investors or angel investors in both geographies, be it India or Southeast Asia?
Sure. So, I mean, secondaries, I think, are pretty standard for most investors. If you're an investor coming in a business and you want to have more equity, but your founders don't want to take additional dilution, then the one way to solve that is through secondaries. And depending on how long the business has been around, the angels or the friends and family or the early stage investors may be looking to sell part of their stake in order to allow an investor to take an increased position in the company. And so I think that would be true anywhere around the world. And it's certainly, we're happy to look at that. If there's a company that we want to back and we want to increase our ownership, that's a great way to do it. So yeah, I think that makes a ton of sense.
Got it. I'm just going back to one of the earlier points that we had discussed, where I think it was Akshay who pointed out that maybe India is 1 or 2 cycles ahead, and just like some data points to support it in terms of the last 3 years, even for this year, I think India's produced about 8 unicorns, almost like 1 a month so far. And there are a whole lot of sectors where India has a unicorn, where Southeast, and we're not even comparing China, because I think China is like several cycles ahead of India for that matter. Specifically to Southeast Asia, and I want to throw it open to all three of you. There are several sectors in India where there are unicorns, but there aren't unicorns in Southeast Asia. So do you think it's just a matter of time before in all of these sectors, Southeast Asia does catch up and produce unicorns? Akshay, you want to go first?
Yeah, sure. No, I think that's a good point. And I think the main reason for why I guess Southeast Asia is catching up a little bit is it comes down to the raw material in our business, right, which is talent. We're in terms of talent, founder talent, engineering talent. I think the region is still developing, right? Versus India, which has been through a couple of cycles now, has a lot of founder talent, which is built companies to a certain scale, exited in some cases, and then it's now starting to come out and start new companies. And so we're starting to see that in Southeast Asia as well. So I'd say that's the main reason. It really comes down to like a funnel, right? If you have enough entrepreneurs starting companies in each every kind of vertical, and a certain percentage of them will be successful, you'll have more high value companies come out, right? And so it all begins with the depth of that talent.
Got it. On founder talent, Kilok, I just wanted to ask you specifically because Akshay brought this point up. Over the last 1 or 2 years, we have seen a lot of Chinese entrepreneurs who have maybe cashed out, got an exit in China, coming to Southeast Asia. We've seen several Indian entrepreneurs who, again, have cashed out or got an exit in India, coming and looking at markets like Singapore and especially a market like Indonesia. At the same time, in Southeast Asia, we're also seeing the first generation of people who are leaving the likes of the Grabs, the Gojeks, the Travelocas, Tokopedias, all coming up and setting up companies here. And some of the founders are also second generation founders. So you think that it's starting to sort of take off in this better talent is starting to come to Southeast Asia?
Yeah, I think for a venture capital ecosystem to work, you always require to have a lot of recycle entrepreneur. If entrepreneur make rich and then retired in Bahama and never come back to the system, that is just ecosystem fail. So I think you look at the example of China or even US, even Europe, why the ecosystem is so vibrant is because a lot of successful entrepreneurs come back to start a company or become mentor or become VC or whatever it is. So this is happening in Southeast Asia, right? And also to the large extent India. I think this is going to continue for a while, which I think is going to help the ecosystem to accelerate over the next 10 to 20 years.
Got it. But do you see a lot more, Kilok, you see a lot more founders from China and India looking at this region because they might have a successful exit in either of these countries, thinking, okay, this is the market I can come and build a similar company in?
I think for India, the entrepreneur coming to Southeast Asia is easier because culturally, I think you can say it's different, but India, Southeast Asia, there's a lot of historical historical reason. So there's a easier for Indian entrepreneur to be in Southeast Asia or vice versa in a way to a certain extent. For China, I think entrepreneur coming to Southeast Asia, I mean, is harder. I mean, in fact, you talk about the wave. When that first wave happened, a lot of Chinese entrepreneurs came down to Southeast Asia. I'm sure half of them already returned back. They find it very hard to adapt to Indonesia culture because the system is different, the way the work is different, and then there's this thing called Ramadan. Once in a while, there's a lot of difference that they don't see that in China, and so somehow they find it harder to adapt to the culture. So that part I think is harder for certain Chinese entrepreneur in this part of the world. But on the other hand, for India entrepreneur, they are familiar with all these culture differences, all these language differences. They probably have a better sense of how to adapt to their Southeast Asia systems.
Got it. David, one last question on the same theme. I was earlier mentioning how there are a lot of sectors in India which has unicorn. For example, like say EdTech, there's Byju's, there's an academy. Trucking and logistics has like at least 2 or 3 unicorns in India, like Delivery and Rivigo. Yeah, quite a few. SaaS has produced quite a few unicorns in India. Vertical retail, yes, again, a couple of unicorns. There's health tech, there's budget hotels. You have Red Doors in your portfolio. Then online aggregators, there are a couple of unicorns. Do you think in all of these sectors, Southeast Asia too has the potential to produce unicorns?
For sure, without a doubt. And to the point earlier, I think a lot of it is just about market evolution. And I think we're at a point in time where those companies are there, they're just in the building phase. And if you think about, companies that were invested in the 2015-16 cohort of companies, a lot of them are getting up to the 400, 500, 600 million type valuations. And so it's easy to see kind of in the next cycle as they continue to raise capital that they will continue to get closer and closer to that unicorn. I don't think it's healthy to think about, achieving some valuation milestones for the sake of achieving valuation milestones. I think the better thing to do is to say, do we have very strong market-leading companies, regionally market-leading companies in a lot of the same sectors? And I think the answer to that is yes. I just think that their valuations aren't equivalent to some of their Indian peers. But I think that's just a matter of time.
Sure. Before we run out of time, I just want to take one final round of questions, and then I'll ask you all for your outlook for 2021. David, I'll start with you again. Just cross-border, we've been talking about cross-border investments for a long time, and many times cross-border investments need not necessarily be just capital. As VCs who do both regions, how much of it is also in helping some of your portfolio companies here, because you also have a presence in India, maybe to get the backend in India, or tech support going in. Most of the unicorns in Southeast Asia, the R&D center is in India. Is it also sort of, sometimes it could also be bringing in talent from across these geographies to help each other out. So do you see that happening? Not just capital infusement to go expand from one region to the other, but as a VC helping in all other areas that are as vital for any company to be in multiple geographies?
For sure. And if you're looking for access to talent, and if you're looking to optimize cost base, there are certainly models that we've looked at with our companies and that other companies have followed, where you put certain types of talent in India, or you have design talent or engineering in Thailand or Vietnam. You capitalize on a lower cost base for those people providing those services, and you're able to access that talent pool. I think that is a benefit of being a regional business, is that you can deploy personnel and labor in markets where you can get the best talent at the best cost. And I think that that's something that we certainly help our companies with. I do also think that you need to have a certain level of experience and people in the network who can help companies navigate the regional markets. To Keelok's point is that, there's a lot of complexity, whether it's, regulatory requirements, or whether it's, culturally on how to work with partners in different markets. I think you just need to bring a lot of that experience to the founders to equip them to be able to build and execute regionally.
Got it. Actually, on the same lines, for somebody like you who's got a large portfolio in India, and as you do deals in Southeast Asia, you mentioned the example of Udaan. So when you see companies, let's say, and just a theoretical example, similar to that, or in this region, let's say Indonesia or Vietnam, within your portfolio, do you think you can get maybe founders or top executives in some of your portfolio in Indian companies to help out, or to sort of guide companies in Southeast Asia?
Yeah, and I think it's already happening in many respects, even within our portfolio, where I'd say especially on technical talent, right? Senior level technical talent, where we're seeing a lot of technical talent starting to even come out in some of our portfolio companies and join some of our investments in or portfolio companies in Southeast Asia. I think the other interesting trend I'm also seeing is some of our founders, even angel investing in their equivalent models in Southeast Asia. We've seen a couple of examples of that as well. So I only expect this, sort of talent flow and knowledge exchange to increase over time, certainly.
Got it. As we wind down, Keelok, we spend so much time talking about India and Southeast Asia, but especially for some of the Southeast Asian companies, does it make more sense to sort of look at markets like Hong Kong, Japan, US, maybe even China, rather than expansion into India?
I think it depends on
That is if they want
industry.
to go.
Yeah, it depends on industries. I think certain sector like SaaS, software as a service, probably US makes more sense. For fintech sector, probably the Hong Kong or even Taiwan or even Japan makes more sense. So it depends on the sector. So I don't think you can generalize it. The certain sector, maybe India is better because of its uniformity and a bigger market. So it depends. It all depends. One of our company like Asia Parents, they expanded to India, even though they are Southeast Asia based. They expanded to India and they're doing quite well in India. So it depends on the sector and not necessarily you can generalize it.
Got it. One quick question to all three of you. How do you see a sector like enterprise software SaaS? Because that's even Southeast Asia is starting to produce some good companies in that space. India has a couple of unicorns. Are you sort of bullish on when it's global companies coming out of this part of the world? Do you think it will be led by enterprise software and SaaS, or other sectors you think will produce companies from both these regions that can go global?
Yeah.
David, you want to go first?
Yeah, maybe I'll start. I mean, we have 4 companies that are global enterprise SaaS. I think it's been difficult for them in a COVID world. A lot of companies aren't buying. I think the sales and go-to-market has been challenging for enterprise SaaS, depending on which space you're talking about. But I do think that's a category where you could go and build a go-to-market in the US and be bringing in US dollar revenue off of a Southeast Asia cost base. And that creates a very compelling set of unit economics.
Akshay, what's your take? Do you see global companies from both these regions in this space coming out?
Yeah, no, certainly. In fact, I actually think we'll see more enterprise companies go global than it's a consumer, just given that generally business behavior tends to be a little bit more consistent than consumer behavior in each and every market, right? So, I do see that happening more on the enterprise side, for sure.
Kilok, your take before we wind up?
I think it's possible. I mean, one of our company, I'm sure you're familiar, called PestNet, with intellectual property analytic and came out NUS students. Today it's a global company with 8,000, the customer, 800 employees globally. Revenue is tremendous amount, and then potentially the next unicorn very soon. So I think it's possible. I think it all depends on what software you're doing and what is your differentiation, what is your technology. Yeah.
Sure. We're out of time, but I would just want all of three of you to give us outlook for 2021. How you see the next year? Will you slow down your investments? You think it will be at the same pace? But broadly, whatever, how are your outlook for 2021? Kilok, please start.
Well, I guess in terms of the COVID situation, it's going to be not very different from what we are seeing today. We are still mostly working from home at least up to first half next year. So I think that this kind of working from home environment is going to continue for a while. So that we all have accepted and adapted to it. So in terms of investment, I don't think it's going to be very much different from most of us. We still continue to look at opportunities, trying to do the best we could to perform our due diligence. So for us, Vertex, we're not going to slow down very much. We probably continue the similar pace. So for 2021, not going to be very different. The only things that is exit market. Exit market continue to be quite strong for IPO. So several of us are trying to capture this opportunity to try to get some of our company to go IPO next year. So that's something that all of us are probably working on.
Are you trying to get Grab to go IPO next year?
Well, that one you should ask Grab. Don't ask me.
Yeah. David, what about you?
Yeah.
Outlook for 2021.
I generally agree with Kilok. I think he made some great points. I think we've proven internally that we can adapt. We've invested in a purely virtual way. So we've adapted our investment committee process. So we're not slowing down at all with COVID. We've adapted to it. And I do think that, we've been busy this year. We will continue to be busy. And I think you'll see a lot of companies come to market to raise capital in the first half of next year.
Got it. Akshay?
Yeah, I think I expect our pace to sort of continue at the way it's been going. And a lot of that, I think, driven by, given, entrepreneurs who have been able to navigate successfully through the pandemic. What I see is, I think we'll see just much stronger companies coming out, right? Just in terms of like fundamentals. And I think that's obviously a great opportunity for the ecosystem overall. And then, of course, alongside that, you have like sort of these COVID tailwinds, right, from rapid digitization as well, sort of, adding additional lift. So I think it should be an interesting 2021 going forward.
Yes, yeah, that's it. We're run out of time. The audience questions that have come in, I think we have covered all of them. Yeah, we have covered all of them in the course of the discussion, so that's why I didn't take any of it. Thank you to all those who sent in questions. The three of you, Akshay, Kilog, David, thank you so much for joining us this evening. We had a great session, a lot of insights, and all the very best for 2021. And personally, from my end, I hope that's going to be it's a much better year when compared to 2020. Thank you all for joining us. Thank you.
Thank you.
Thank you.
Thank you.
Bye.
Bye-bye.